In this video, I'm going to show you how you can retire on the SPY and make $5,000, $8,000, $10,000 a month or more by running zero DTE or weekly swing trades. Stick around, don't skip any part of this video because I'm going to show you exactly how I do it, my hidden strategies that I utilize in order to make this happen and in order to gauge the SPY and where to get in and when to get in. But also, if you have a small account, I'm going to show you how you don't need hundreds of thousands of dollars to run a similar strategy and generate consistent income. So stick around. I'm going to show you guys everything you need to know. Before we jump in though, if you are struggling in the market, I have just opened up more boot camp positions. If you guys want to change the way you trade and make money, you guys can join my Discord. The link's in the information box below. You will get access to 6 hours of video on demand training, 2 coaching calls a week. You're also going to have trade alerts daily and weekly, as well as copy my trades in the coaching calls. And I'm launching a very special boot camp. They're opening back up. If you're interested in turning your losses into wins and making profits like you see my students have made on the screen, the link to join the Discord is in the information box below. I look forward to seeing you very soon. So the key here, trading SPY, in order to set this strategy up, we first have to gauge where the SPY is likely to go, because we don't want to put ourselves in a position where we're getting assigned every other week. We want to be able to sell consistent put options and make passive income every week, bi-weekly, weekly, daily, monthly, whichever way you prefer. In this video, we're specifically going to focus on zero DTE or weekly, but I'm going to show you how we do it. This way, when the time comes where you might actually be assigned, it's going to be at a lower price, a lot safer, and it won't happen as often. Now, trading SPY is significantly safer than trading any other stock in the stock market, with the exception of maybe Coke. And to be honest, it's probably safer than Coke because it's got many different stocks in it, like Apple, Microsoft, Google, Meta. It also has Amazon, and it has other stocks like Tesla. This is a balanced ETF, and when stocks aren't doing well, they get removed or they take up less of a position. There's a rebalancing. So the SPY is very safe. Now, I use my AVP, which is a strategy I teach in the Discord, my mastermind class, boot camp classes. Like I told you, if you guys want to join Discord, the link's in the information box below. And I'm going to show you, when we look at the SPY on the 4-hour chart, my AVP is between 570 and 590. 570, 590 is AVP. So if you're going to get assigned on the SPY long term, if you end up getting assigned, you want it to be 585, 580 or lower. This way you are $30 or so below the top price and you're not buying in at the top. So if you're getting assigned down here, like right here where this line is, you can see all this area up here, you're below all that. So it's not as bad. Ideally, you'd want to be assigned down here in the 576 range because then it's a lot safer. So how do we do this? Well, the idea is to sell put options daily for multiple weeks, up to a month or more, so that if you get assigned, your average cost will be at the bottom of this AVP. Now, hold on a second. If you're confused, I'll show you exactly what I'm talking about. When you sell a put option every day and collect $10, let's say, after 5 days, you've collected $50. If you do this for 4 weeks in a row, that's $200. Which is $2 because you divide by 100 shares, which means whatever strike you chose, take $2 off. That's your average price. So if you're selling 590s, your average price is 588. That is just an example. We're going to make a lot more premium than $200 a week, but I just wanted to point that out so you guys have an understanding of how this works. So what we want to do is, when you're selling daily zero DTE on the SPY, you're typically selling 25 to 30 delta, but there's a very, very important thing you need to do daily when you're selling, and you want to open up. You can see we're in the pre-market hours right now. I specifically waited to film this when the pre-market would open up. You can see this big dip down here that just happened. This is what we call a liquidity grab, or almost a liquidity grab. This happens. This is a sign of very, very bullish sentiment, and it's a good thing. But if you miss it, then obviously it's not good because you're missing profits or potential profits. But what we want to do is we want to look at the 30-minute candle and the 15-minute candle. We're going to have to go back in time a little bit here. So we're going to look at, let's say, this past week. When we look around 6:30 a.m. The lowest was around 598 and the highest was around 600, around 815. Then when the stock market opened up at 9:30, it started to go up. So what we're looking at is we take the lowest price in the morning, which is right here, and the highest price in the morning, which is right here. When the stock market opens at 9:30, if the SPY goes above the pre-market high, you'll immediately sell put options at the pre-market low, right at the low or right below it. If the SPY goes below the pre-market low, well, then you'd sell call options above the pre-market high. Now, this doesn't always work out, but we're going to be looking to sell put options. So in the event that the SPY does drop below the pre-market low, well, then what we're going to do is we're going to go to the most recent low previous to that, go below that and sell put options. But we want to make sure that if the stock is dropping in the morning, that once it stops and starts consolidating around 10 a.m., 10:30, then we enter. So if the stock starts dropping like this, we wait. You can see right here, it consolidates and then starts to go up. Then we go below and sell that put option. It's very important to understand this, okay? So what we're doing now is we can see that the pre-market low right now is 604. We can't go off of this right now. So we're just going to go off of yesterday. So we can see the pre-market high was 6 a.m., 596. Pre-market low, which was around 8 a.m., was 592. And then when the stock market opened, it went above the pre-market high. So if you would have went down and sold a 593 put when SPY broke 596, you can see by the time we get over here to 3 p.m., we're at 598. You can see we would have made money, would have made about $150 per contract. So this is how it works out. So in this example, we're going to delete everything to over here. We're just going to look at yesterday. Okay. So you can see that the pre-market low, we'll actually get rid of the replay because it says replay on the screen. All right. So we can see the pre-market low and high right here. So the low right there, the high right here, H and L. And then at 9:30 right here, it breaks it. So we immediately go down here and sell a put option at 592. Now the current price of the SPY is 604. Hypothetically, if the stock opens up at 604 and starts going up, we would sell below this gap, which would be about 603, or actually a little bit safer, we would do 602. So if the SPY opens up, let's just say at 600, and we are sitting at 600 when the stock market opens and it starts to go up, we would go down to 596, which would be down here. And what I like to do, a little trick that I like to do, is I go $1 lower, 595, and I go to the next day so we don't actually use up day trades. So we sell for tomorrow, one day. And then tomorrow, when the option's about to expire, we can roll to the next day. So we can sell to Tuesday, roll to Wednesday, roll to Thursday, roll to Friday, and then Friday we can roll to Monday. So we're always rolling, not using any day trades, and it's still one day trade. It's just not same day. Now we can do same day trade, but rolling into the next day, the next day, the next day, more premium, slightly safer, and you don't use day trades. So what we're going to do is we look at the SPY. We can see that if we were to sell an option on the SPY for tomorrow for $595, it would be $112. Then we're going to sell it again tomorrow and then the next day. So you're going to get 4 or 5 sales per week, depending on how you roll, but we're going to go with 5 days per week. So we're going to adjust our strategy no matter what happens with SPY. So if SPY ends up dropping to 596, we don't get assigned. And then tomorrow the SPY stays around 596. We're going to go ahead and sell one at 593. We're always going to be looking to enter into the 10 to 15 or 20 delta range, depending on the price of the stock or the ETF and where its movement is. So if we sell a same day for 596 and the SPY drops to 596.50 the same day near 4 o'clock, we buy it back for a couple of dollars. We wait till the following morning, because the following morning pre-market, the SPY could dip. Once it dips, we wait for consolidation and we go below the most recent support, like I showed you. So let's say we did a 596 today, which would be right here, and the SPY does this number. And at the end of the day, we buy it back. No problem. We don't get assigned. We wait till the following morning. If the stock does this number and then at opening bell it comes up like this, well, then we're going to go go below the most recent low, which is over here, 590 or even 588. And we're going to go down here and sell a put option here. This way, once we get out same day for a profit, everything was successful. We wait to the pre-market to see what's going on in the pre-market, the overnight hours. And after we gauge it when the bell opens, then we can see where the most recent low and support is, make sure the stock is consolidating or going up. Then we can go to that support and start selling our puts again around 9:45 a.m. Lots of volume and also lots of premium. Now, if the stock dips and continues to dip after the bell opens, we wait for that to stop, consolidate, then we look back and see a recent support there and go below that. So if we don't actually get a bullish open, and let's say the following morning after we've had a successful run, let's say on a Monday selling put options, and we wait to see what happens Tuesday, and then the stock opens up or the ETF opens up and then it drops, and all morning up until about 10 a.m., 11 a.m. it's dropping, then it finds support. Okay, well, I'll look over here and see lots of support down here in the 580 range. So I'll go over here and sell 580s when the stock is 587. So I'm always about $5 out of the money. That's the way it's looking roughly, because we're not going by dollars, we're going by delta. When you're selling a 25 delta, you're usually within a $5 range. Typically, if you're selling a 20 or 25 delta, it's usually $2 to $3 same day. It'll be about $4 or $5 next day, just depending on the movement of the stock. But I always sell a 20 delta same day, which usually gets me about $60 to $80 a day, depending on the movement of the market, volatility, and what's happening. So now that we've got that out of the way and we understand exactly what we're doing every day, I'll go ahead and I'll execute this sale. The stock's above 600. It's moving slightly up. It's had some support. I immediately go to the most recent support. Bam, 596. I'm going to go ahead and sell 10 of these options, and I'm going to make $680 in a day. And I'm going to do this every day because I'm selling relatively the same delta. So we're going to calculate $680. And you can see that if I do this 5 times in a week, it's going to be $3,400. I times by 4. It's roughly about $13,000 a month running this strategy. Now, if I want to play this even safer than I'm currently doing right now, because if I was to run 7 contracts, this would be $476 a day. 476 times 22 trading days a month, it's $10,000 a month on 7 contracts. We don't even need 10. But if we're going to do 10 contracts, we can go a little bit safer and go like a 15 delta and go 594. This would get us 10 grand a month. And this is almost $10 out of the money, $8 to $10 out of the money daily. So if the SPY opens up at 602, you're selling like 594s. SPY would have to drop $8 the same day in 6 to 7 hours for you to be in a losing position. Now, granted, this could happen 2 or 3 times a year. This could happen, but you got to remember, if you end up getting assigned and it happens, then you're going to start selling covered calls to get out. And it's likely that this is going to happen maybe once or twice a year. But if you're selling safely, like I'm showing you, and you get out same day, the next day you wait for the pre-market bell and you wait to see where the stock is, make sure it's at a support, not going down. It starts to go up. Then you go below the most recent support. It's unlikely you'll be assigned because you're constantly selling lower deltas out of the money and you're waiting for the market to show you that it's strong. If the ETF is dropping, if SPY is dropping, you don't sell the puts until it stops. So every time you're entering after the drop and the stock's going up. And if it just keeps dropping, you don't enter. So realistically, this strategy, how I've been running it for years, I only end up getting assigned once a year on average. And in fact, I have not been assigned on SPY other than March 2025 when we had this major catastrophe with tariffs. Besides that assignment, it had been like 16 months since I'd been assigned on SPY. And that's because of this strategy. I'm waiting for pre-market, waiting for the drop, waiting for consolidation, and then going to the most recent support and below that at a low delta and selling the puts. So we really would need a semi semi crash or a pretty nasty pullback in order to get assigned. And we don't get nasty pullbacks 10 times a year. It happens like once a year, sometimes twice. So and sometimes it doesn't even happen twice a year or even once a year. But there are a few years in the past 5 to 7 years. There has been a couple years in the past decade where there really hasn't been major pullbacks like that. And like I said, the SPY would have to pull back $8 in a single day in order for you to get assigned. And if you do, it doesn't stay down long. We had one of the biggest pullbacks in the last 8 years on the SPY. It lasted 6 weeks. So if you got assigned on SPY like I did at 575, and then the ETF drops to 510 or 500, it went right back to 600 in a month and a half, 2 months. So really, it only kills 2 months out of the year if it happens. And that was during a major tariff pullback. This didn't happen last year, except August, but that only lasted a day. So when you look at it, worst case scenario, the worst pullback we've had in years and years and years, it lasted 2 months. So you have that once in a year and you still have 10 more months of selling. So 10 months times 10 grand is $100,000 a year. And then you had 2 months bag holding and then you sell the stock at a profit with covered calls. So essentially you probably made 10 grand there, maybe 20 or more. Essentially though, $100,000 to $130,000 a year doing this strategy is still going to average out to $10,000 a month. I do it all the time. The numbers are relatively indicative of the amount of contracts, but they're consistent. If you want to learn more about this strategy and you want to turn your losses into wins, maybe you're new to the stock market, maybe this is all gibberish to you and you just can't understand it, I would love to help you understand these strategies. I would love to guide and coach you to become a successful investor so you can live the life that you ultimately deserve and that I know you want to live. And I am driven every single day to help people just like you achieve your dreams and goals. Just like the comments you see on the screen from my current students that are turning 8,000 into 40,000, 300 into 800,000 in 10 months, and other students that are turning 150,000 into $250,000 in as little as 4 to 6 months. If you want to change your game and the way you trade and you want access to my Discord coaching, my trade alerts, the entire Ask Corey section, which is 24/7, and my new masterclass and boot camps that I'm getting ready to launch that you don't want to miss, that I have very limited spots for, you can use the link in the information box below so that I can start helping you turn losses into wins with strategies just like this. So I'm going to show you guys a trick that you can run on the SPY, very similar to what we just did, but for small accounts, because selling 10 put options on the SPY is $500,000. If you're selling naked options, well, then it's going to be about $90,000 to do that. So if you don't have $250,000, this would be really hard to do. If you want to make money on the SPY and you have a smaller account, let's say you have a $50,000 account, well, then you can use up to $10,000 or $5,000 to be even safer selling put credit spreads on the SPY, but we have to be a lot safer. So when we did this number earlier, instead of going with a delta that was 20 or 25, we're going to go 10 deltas. So for example, if the SPY opens up and the pre-market low is, let's just say the pre-market low is 600, then it opens up at 601 or 602. What we're going to do is we're going to go much lower. Instead of selling a 596 or 597, like we're selling put options, we're going to go down and sell a 593, and then we're going to buy a 583. Okay. So this is $1,000 spread. We're going to make $30, which you may not think is a lot of money, but instead of making $60, we're making $30. So half the profits that I was making selling the put options, but instead of putting up 90 grand for 10 of those, you don't have to put up 90 grand. You only have to put up 10 grand. So it's a lot less. Now, granted, if you lose on these, then you're going to lose $900. You don't get put the stock unless you close your long put option, the one that you're buying, the 583. If you close that, you'll be assigned on the 593 if the stock was to drop below 593. So if you end up only selling one of these and you'd rather not take the loss and you would rather just take the shares, you can sell to close your long put and take the assignment on the short put. You can do that. It's breaking the legs, and that's a very advanced strategy. So if that confuses you, then maybe you hold off on that because there's a lot of risk if you don't understand that. Do not do that if you have a small account. Very, very risky risky. If you guys want to learn that, I will teach it to you. Link to join Discord below. It's something that is very hard to learn and get used to, but once you do, very powerful. So you can see here, if we were to run 10 of these, this would be $10,000 per day, and we could generate roughly $300 a day. 10 times 3, or 10 times 30 cents, is $300 a day times 100 shares. So $300 a day. So running these spreads, it's $300 per day times 5 is $1,500 a week times 4, $6,000. You can run $10,000 worth of spreads on a $50,000 account or a $60,000 account. That is very risky, though. I prefer $100K if you're going to run $10,000 worth of spreads. So on a $100,000 account, you can make $6,000 a month doing 0 DTEs. And it's a lot less risky because we're selling put options that are $11 out of the money. $11 same day. The SPY would have to drop $11.30 in 7 hours before you would even be losing any money. So at 4 o'clock, if the SPY dropped $11.80, you only lost $50 times 10, which is 500. You didn't lose 10 grand. You lost 500 because the SPY has to go below your break even before you're actually losing money. And break even would be 592.70. So if SPY dropped to 592.50, then you only lost $20 per contract. So in order for you to lose a lot of money, a 10% loss would be $970. In order to lose $970, SPY would have to drop to 591 and change. So essentially it would have to drop $13 in a day for you to lose 10%. This is why we run this strategy very safe, just like this. Very simple. If the stock opens up this morning right here, and let's say morning bell, it bounces up and it starts to go up right there, and it's at like 605, well, then we're going to go down here on the spreads and we're going to sell around 595 or 596, probably a 596, which is right here. So we're going to do a 596 right there, which means the SPY would have to drop $10 or $11 in 6 hours before you'd even be at risk. And we're selling way below all of these highs. Look at the support right here, right here, right here, right here. It would have to break through all of that. There are times in the year where this might happen once or twice a year, but because we're doing it very safe, it might only happen once or twice a year. So I've accounted for bag holding 2-3 months out of the year. You're still going to be making $6,000 to $10,000 a month the other 10 months of the year. So $60,000 to $100,000 a year, even accounting for that. And we're not accounting for the covered calls or getting out at a profit. So there's a lot of money to be made running the strategy if you understand the risks. Now, if you have an even smaller account and you want to do this and you don't want to run $1,000 spread, let's say you want to run a $500 spread, you'll buy a 588 instead of a 583. You're only going to get $22, but your max loss isn't $10,000, it's $47.90. It's $5,000 less. Granted, we're only going to make $222 a day or $220. So times 5, this is going to be about $4,400, maybe $5,000 a month, because if we were to sell a 595 this morning and the stock was to jump up, then it would be closer to $350 a day. So $350 a day times 5 would give you $1,750 a week times 4. It's about $7,000 a month. And we're doing this on $5,000. So essentially on a $50,000 account, 10%, which is my rule, 3310 rule, something I teach to my students. I would love to teach you these rules and these strategies, AVP, double fib, as well as my 3310 rule. You don't want to go above 10%. So on a $50,000 account, 5,000 is 10%. You could run 10 contracts on SPY at a $500 spread, making $7,000 a month on a $50,000 portfolio. It is very, very doable because of how safe I trade. We are going to be running 15 or even 10 deltas. That is very safe intraday for the SPY. So this is how you turn small portfolios into bigger portfolios. You can grow a $50,000 portfolio about $5,000 to $7,000 a month by doing this strategy. But if you want to play this even safer, which personally I like to do, you could go down to 592, which is like an 8 or a 9 delta, and do 8 or 9 deltas daily and do a 587 $500 spread. This is only going to get you $180 a day on 5,000. But you figure $180 a day times 5, 900 a week times 4, you're growing a $50,000 portfolio, almost $4,000 a month. This is 10% per month. So at the end of the day, let's just say 10 months out of the year you're doing this, your 50,000 is now 86,000. You're holding SPY, selling covered calls, and then you get out at a profit. You could turn 50 into 85 to 90, even 100 by the end of a 12-month period, which is a lot. So this is why this strategy is so powerful, 0 DTE on the SPY. If you're not understanding what a 500 spread is or 1,000 spread, or maybe you don't understand how to even set any of this up, like I said, you guys can use the link in the information box below to join my Discord. I would love to teach you. I would love to help you, fam. It's what drives me every single day. I'm living my dream life and my best life, and I would love for you to be able to do the same thing. Don't take my word for it. Let's take a listen to what my student Flute had to say. Here with Flute Ramon, who has joined my Discord most recently. How you doing, Flute?
Thank you so much, Corey. These 6 weeks have been the best weeks of my life. Thank you so much.
You're very welcome, Flute.
I started during COVID because I'm a musician and all my tour got canceled during COVID. And that's when I entered the stock market. And 2022, I think I came to options, and that's when I started losing a lot of money. And I lost a lot of money, like 90K or so.
What stood out to you most about me in comparison to anyone else?
Because I always liked the retirement strategy, and you had videos on SPY, how to retire with 10K. That was one of my goals. If I can make 10K a month. And then I was in the webinar. 15 minutes down the webinar, I saw the truth in you. When you spoke about your story, I could literally feel the truth. Then I just booked a call. I didn't wait for the webinar to get over. I found the earliest date available, booked the call. Without a mentor, I cannot win this game. I was almost this close to give it up and then focus on my music. I got lucky that I found you. Very nicely you teach it. You make it very simple, to the point. Those lesson modules are not lengthy, very, very concise. And I think even a high school student should understand all your lesson modules. They're simple, so good.
What are you up since joining? You've been in this program for 6 weeks. Year to date, you were at a negative like $90,000 loss, which I've helped you pull out of. Share your experience.
The truth is in the pudding. Why don't I share my screen? Do you see my year to date?
$51,000, 26% in 6 weeks is amazing.
Yeah.
And you were in the negative from negative 30 all the way to positive 51 in 6 weeks.
There's one more thing which I did not add. Hold on. Look at this. This is also, I just switching from Schwab to Fidelity.
Even after all the losses, you've made almost 55,000 in 6 weeks.
Absolutely. Yeah.
Absolutely amazing, Flute.
You changed my mindset, and I am not scared looking at red. And the lessons I've learned from you this past 6 weeks have been a transformative journey for me. I owe all this success to you. It's because of your mentorship. Night and day, I can see like how I was losing and how you changed me. Everything changed after that, after your mentorship.
So you heard what my student Flute had to say. He came in with big losses and made 80% of those losses back, like $65,000, $70,000 in profits from January through February into March. And now he's made a lot more money. In fact, in the last 3 months, he's made like another $50,000. This is how you trade, and this is the safe way to run these spreads or to sell the put options. So if you're running this strategy on a bigger account selling the put options, you could make $5,000, $10,000, even $13,000 a month, depending on how many contracts you're selling. And if you're doing it on a small account, like a $50,000 account, then you can make $180 to $300 a day, depending on the delta you're selling. I recommend going safer and closing them out at the end of the day for profits, waiting till the following morning and waiting for the ETF to show you what it's going to do if it's dropping or it starts to run, where you've got support and stability and go below the most recent low at a safe delta. If you're selling put options, 20 to 25 delta. If you're selling put credit spreads, you want to be a 15 or even lower, let's say a 10 delta. This way you're further out of the money and a lot safer for your portfolio. I look forward to seeing you when you use the link below to join my Discord real soon so I can help you start making money, fam. And I'll see you on the next video here on YouTube. Take care of yourselves.